What's up? What's up? So you can see now. So you can see till now we came up from down this consolidation, and then we came up, did a pullback, and then went up again, had some aggressive buyers show up down here, and we're trying to take it higher. So still looks pretty bullish to me, and yeah, I would say it was a pretty fine trade. Not too much consolidation, consolidation and balanced market kills your account basically. So you gotta be careful about balanced markets and stuff. So what we're waiting for now is, so you can see these aggressive buyers, right? So I want to see is some sellers aggression getting absorbed too. So that indicates that even big sellers came into the market. Buyers are still strong. So let me tell you why I took this trade in the first place. So see how right at the opening we had a 5-minute candle that was, it indicates that it's an imbalance, right? Because right after open it went up and broke out of this range. So we broke out of the value area high. That indicates that this market is trying to break out higher, and the volume of this candle is significantly higher than the volume traded during the session. So that means it tells us that the market is trying to take it higher, and you can see here as we did went up, there's some rejection of sellers from down here. So what I anticipate is this market is gonna probably chop around a bit and break out higher again, go either up, right, or chop around and have a retest and go down. So I mean, looks like basic stuff, but trading is basically basic, right? You can either buy or sell. So I would want to move my stop loss in profit a little bit, not much, just around there, because I don't want to be holding the trade once it breaks this low. So we're already up 300 something in the first half an hour of the market open. So we just got a trade right at the market open. I would prefer to have a trade right at market open than rather having to wait around and take a trade, if that makes sense to you. Because I think it's either I go into a loss or profit, then my next trade is either gonna be really good, or next trade I'm not gonna take it if I have a loss. So And here's the thing about having patience in trading. If you don't have patience in trading, then you can't make it. Simple stuff. Because trading is like a form of meditation. You just sit there, do nothing, wait around for price to go to your place. So you gotta have a lot of patience. If you don't have patience, then you're like what do I call it? You're like nothing in trading. Simple stuff, but simple stuff adds up. So we're just waiting for this price to do some movement. Then we might also add to this trade if it shows some strength to the upside. So we're seeing some bulls being strong in the market. So a little bit of choppy price action, and I think the volume is flowing around, so we should be good. We should be really good in this trade. So here's the thing, right? Sometimes what happens is when you're trading a trend day and right after market open a move happens, then that move continues for the whole day. And these days are what I call golden days. And on golden days, you gotta double down. You gotta the capital you preserve. These are the days you utilize the capital, because you know the market is gonna be super directional in one direction, right? So unless you make a major mistake, you're not gonna lose money. So these kind of days you gotta utilize and understand and adapt to the market. So now if we let me pop up the tape real quick. So let's put the tape around here. Yeah, easy for both of us to see, and you also understand what I'm saying. So you see the tape, it's like an auction process. You see like the orders coming in. You see the blue color is the buyers and the red color is the sellers. So it's like a continuous auction, and whoever wins the auction, so there's like, so let me make it straight, right? There's two kind of conditions in an auction process. When, let's say somebody wants to buy a art piece, right? And the art piece goes for, let's say, $1 million, and somebody might come and say, oh, I'm gonna buy it for $1.1 million. Somebody might say I'm gonna buy it for $1.5 million. So if the bidding is higher, then the market is gonna go up, right? So something like that, if somebody is willing to pay a higher price on the art piece, being the market, then the price is gonna go higher. And as higher the price goes, if the volume increases, if you know what I mean, like if price is going up with the volume, people are more interested in the higher prices, in the higher auction, then that means the market is gonna go significantly higher. It's like law of human nature, supply versus demand, that they teach in business school, and a bunch of stuff. It applies to the market too. Human psychology applies to the market. When you see a panic condition, here's the thing. People know that, let's say Apple got into a lawsuit, then, or something bad happened at Apple. They know that Apple is a safe stock. They know that Apple is gonna, let's say even Apple goes to $50, then they know that it's gonna recover back to its own price. But why do people take out their money? Because that's the panic. That's the panic of human nature. And when price is going up, some people, mostly retailers, they don't want to buy because they think it's an expensive price. Yeah, makes sense. Makes sense in real market. Makes sense in a grocery store, but doesn't make sense in the market, because when price is going up and the volume is increasing, then that means more people are interested in buying rather than selling. So you gotta understand the auction process of the market and trade accordingly. So right now we can see on the tape is, you see the line around here, so that's the strength line. So you see, as price is going up, the buyers seem stronger than the sellers. Damn, the market is going up. It's going up like crazy. So, like I explained, this is the auction process, and right now buyers are stronger than sellers. And every time a seller tries to sell or hit on the tape, they get absorbed, if that makes sense. Absorbed in terms of, if somebody's buying in, somebody gotta be selling in the stock market. If you're buying a share or if you're buying a contract, then there's a person that's trying to sell. Has to be, or else the stock market could not operate, right? So there's like big market makers. We call them market makers because they provide liquidity to the market. So let's say you wanna buy a contract of Nasdaq at 12 a.m., right? So if you want to buy a contract of Nasdaq at midnight, then you'll be able to buy it. But there might not be a seller ready to sell it at midnight, because obviously most of the people are not awake at midnight. So the market makers, they provide you liquidity. So when you're buying, they sell, and when you're selling, they buy. So that's how they provide you liquidity. And these market makers can actually control the market, because you could call them all the contracts they have and all the liquidity they have. And I mean, it's like a zero loss game for them, right? They utilize the market process, market auction, and make money off of it. Looks like we're gonna hit our TP pretty soon. Take one trade and be done for the day. That's the best trading day. Not being in the market is trading, actually. If you ask me what's trading is not being in the market and watching the price. I think that's trading. That's the actual trading. Being in the market is kind of risky, if that makes sense to you. Let's say if you're trading and Trump drops a Twitter bomb, then you go in a loss. But if you're just watching the price, then you can take that as an opportunity and take a trade based off of it. So watching is the actual trading. Almost at take profit. Tells us a nice little trading day, you know, easy, not too much stress, not a losing trade. I mean, as long as I don't have a losing trade, it's a good trading day, right? I'm not losing money. So yeah, market seems pretty fine, pretty bullish. So I'll use my, let me give you guys a real quick tip. Always try to put your stop loss 2 candles behind. If you're trailing it, trail it 2 candles behind. Because if you're putting it 1 candle behind, then sometimes market goes down and sweeps that candle and take the market higher. So based on my experience, 2 candle stop loss is, I think, the best. So almost at TP right now. Nice easy trading day, getting 4 times the return, 4R. So, you know, pretty chill day, pretty fun day. Good start to the week. That's all I would say. Good start to the week. Because if the start of the week is bad, then most of the times my momentum is kind of messed up, kind of fucked up, you know. If Monday is good, then I'll try to make Tuesday better, and if Tuesday is better, I'll try to make Wednesday the best. And mostly based on my data, Thursday is my most profitable day. So yeah, Monday sets the momentum for Thursdays. 100%. So let's trail it a little bit higher, you know, not get back to the market too much, because it doesn't make sense, right? We're making, potentially we're making, let me see, potentially we're making 1,000 something, and we risked 236. I mean, that's a very nice trade, really nice trade. 4R on a Monday, what you talking about? So we did got stopped out right here, no big deal though. Got trailing stop loss hit, so that means market ain't that for us right now. A nice 635, not a bad day. So let's not fuck up the momentum for Monday, and let's call it a day. What do you say? Almost $700 in half an hour. That's a very nice trade. In 40 minutes, I would say. So that's a very nice trade. Nice little start of the week. Nice little momentum for the week. And a nice little Monday. It's good. Market is good. And I'm gonna journal it now. Journaling is really important, folks. That's how you know what's working for you and what's not. Your risk strategy and all other kind of things, if it's working or not. That's how you know. You gotta journal every day, right? Alright then, that's it for today. See you